Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi, and clearly the market is ending the week on a high, and we made a dash towards the all-time high level. 24,850 thereabouts is the all-time high level. We made a dash to that, cooled off a tad bit from there, but nonetheless, we've made a marvelous recovery from the lows of the trading session today. So very good momentum despite those LCR issues coming in for the banking index, despite the performance that we have seen so far of the broader markets today as well. There's a good amount of momentum as far as market is concerned. VIX has too cooled off. So yesterday, of course, was expiry. After that, we have seen a slip of almost 2 to 4% on India VIX. You have the auto index, which is firing away on all cylinders. You also have pharma index, which is at record high. IT too, on account of some of the smaller mid-cap names coming in, the likes of Emphasis, etc., is actually sitting at record high levels. So a lot of these sectoral indices actually doing quite well. We're seeing a lot of earnings reaction too right now. Look at the stock of Shriram Finance. When the first numbers ticked in, we thought it was largely in line with expectation. In fact, there were some worries about NPA quality. The street is not taking any of that. The stock is up 10% as we speak as far as Shriram Finance is concerned, and it wasn't a one tick that came. The stock was actually red at one point of time. It moved up almost 1 to 3%, then slowly and steadily it's built on to gains. Right now a gain of 10% on that. In fact, Emphasis too is one of those candidates as an earnings reaction. Stock up 6 to 7% after management said that the order pipeline is very strong and they're expecting and targeting an industry leading growth. Ashok Leyland as well, on account of that brokerage upgrade, and a solid set is something which is doing quite well. In fact, insurance as a sector is also buzzing. So you have LIC, which is trading clear to close to record high levels. GIC is up, and take a look at New India Assurance, almost a 14-15% uptick coming in on that one. So clearly a lot of sectors, Aisha, buzzing around, a lot of individual names doing the action, and you can't forget Paytm with that big 10% surge right now.
Absolutely. You can't take your eyes off from either Shriram or Paytm for that matter. And maybe for Paytm, the gains are not it, given that the government has now approved their FDI proposal for payment aggregator business. Paytm can now approach the Reserve Bank of India to seek payment aggregator license, which the central bank is going to then navigate. So a big overhang gets lifted from Paytm. 8.25 million shares traded already. The stock is back at those 500 plus levels. In fact, let me welcome on board Aditya Agarwal, Kunal Bothra, as well as Pashupati Advani, and figure out what they're making of the market and, of course, individual names right now. Pashupati, hi, afternoon. Let's discuss Paytm first, considering the news just came in a few odd minutes back. The market time and again tells you that there is money to be made in some of these disbelief to believe stories, but would you have conviction in Paytm just yet?
So I'm actually crying because I bought it right and then sold it about $50 ago, and now watching. But I think, if they're getting their license, it'll be wonderful. If they don't get it, it'll be again a problem. But I think they're being smart. If you use, any of you viewers have used Paytm, you see they're trying to capture multiple bank UPIs, and therefore they're going to use, I think, HDFC Bank, SBI, Yes Bank, and there's one more that they're using that will all benefit. And they're already positioning themselves as an aggregator. So I'm sure that given they won't have the money with them, the money will be lying in the banks. The RBI should give them the license. But again, how long it's going to take and all that stuff, we won't know. But I mean, it's therefore going to run because now it stabilizes again. They will lose a little bit of money that they were making on transactions on money. They have to give some of it to the banks, but I think that all in all, the business model remains intact. So it's good news for Paytm.
Okay, so it's good news for Paytm, and Achal is coming in from the market with that 10% uptick. But do you think this move on Shriram Finance, Mr. Advani, is a bit overdone? Did you get a chance to look at the numbers?
Haven't looked at the numbers, but basically I'm not very happy about the NBFC space because I think that a lot of them have made loans that have been made what I call on computer. You walk into a shop, you buy a white good, you just give your details, your Aadhaar card, and you get a loan. So there has been very little due diligence done. So let's see how it all settles. Shriram may end up being on the top of the pile, but the reality is we don't know who are the winners and who are the losers. But I will say one thing that, like, for example, the guys who had lent against gold, they are obviously going to be hurt by the fact that gold has gone down in price, and therefore their loan to value gets hurt. So whether they've done the due diligence as to whether there's repayment possibility and things like that needs to be done, I think that those are all questions to be asked. And whether Shriram Finance has either directly or indirectly given to people who lend for gold, time will tell.
Okay, point taken. But since we are on the subject of Shriram Finance, let me take it across to Snehi to get a sense on the numbers. Snehi, on first look, the numbers look, in line with expectations. Any surprises that you are spotting?
Absolutely, like you summed it up, largely inline set of numbers coming in for Shriram Finance this time around, but there is a slight bit of a miss coming in on interest income that has come in at 9,362.8 compared to that 9,500 plus figure that we were expecting here at 80 now. So slight bit of a miss on that front, and also there is a miss coming in on the net interest income that has come in at 5,234 crore rupees compared to the 5,385 crore that we were expecting over here. But overall, there has been a growth of 24.6% on the net interest income. Other than that, PAT has largely come in line with what we were expecting over here. It's come in at 2,031 crore rupees. We were seeing it at 2,021 crore rupees, so largely in line with what we were expecting. And PAT has also grown by 18.5% on a year-on-year basis. And the PPOP, which is the operating profit, also largely in line with our expectations over here, has come in at 3,854 crore rupees compared to the 3,968 we were seeing. So largely in line with what we were expecting. Now, asset quality also has been largely stable. In fact, it's improved. GNPA coming at 5.39% versus 5.4% QOQ. NNPA is right where it was at 2.7% on a sequential basis. ROA now has come in at 3.12%, and we were seeing this to come at 3.29%, so slight under over there. ROE has come in at 16%. We were expecting at 16.7%, so very minor miss on that front as well. But overall, numbers are looking good. Now, even if you take a look at their individual segments also, there was a very good growth coming in the farm equipment segment. That segment has done pretty well for Shriram Finance this time around. So largely overall a good set of numbers coming in for Shriram, in line to what we were expecting. Major misses, but not much to worry about. And also you have commercial vehicle that's grown by 14.5%, passenger vehicle up 26%. Farm equipment is the one that stood out the most, but well, yes, this is the review coming in on Shriram Finance, largely in line.
That's the take coming in on Shriram Finance right now. But Kunal, let's address the market as well. I mean, of course, there are those individual movers right now, and there's the Morgan Stanley note now coming in on Shriram Finance as well. But the index, almost 400 points up, start of a new series.
I think this is phenomenal. This is exceptional. I think if budget day was a surprise, the market reaction, then this
Today's
is just
a bigger surprise.
then this is just a big add-on to that. I think it's no words for that, because this kind of a move was completely unanticipated and expected, at least on the Nifty and the Bank Nifty front, because we expected the indices to broadly get into a phase of consolidation. So the markets are basically indicating that they're shrugging off any kind of a worry from the global market cues which were handed over the last 3 to 5 days, where we saw the global markets correcting by 3 to 5% broadly. The mid caps and the small caps are doing exceptionally well. And today again, one of the classic days which we had repeated, I think few weeks back, that the large caps are showing signs of classic outperformance. And what I like about the market today in terms of large cap names is not the usual large cap stocks which have been doing pretty well, but there are a lot of underperforming stocks, and the ones which were correcting over the last 2-3 weeks, they are making a very strong comeback. So it's almost like a V-shaped recovery for many of the large cap names, and I think that's adding to the positivity as well as in terms of sentiment to the market mood.
Yeah, but I clearly think that the market doesn't need any positives as such. It's turning bad news also into good news, and there could be classic cases of the likes of Shriram Finance, etc., wherein the street thought initially that there was some pressure as far as NIMs are concerned. There is a bit of chink when it comes to the asset quality, but no. Not buying any of that. We are only seeing the glass half full at the moment. But Aditya Agrawal is also with us. Aditya, your quick view on the market mood, and if you have a view on individual names like Shriram Finance as well as Amara Raja Batteries, because that's managed to inch up 7% in the last few minutes itself.
Afternoon, Nisha. Thanks for having the show. Clearly, markets are up and about, and I concur with Kunal's view on the fact that everyone is taken by surprise as far as the Nifty is concerned. Nobody had thought that markets will move up, and how 400 point on the Nifty and 350 point on the bank Nifty clearly shows that the markets are still going very strong. Despite the fact there were indicators yesterday and day before yesterday suggesting that market could enter into a consolidation phase, markets shrugged everything and it's up 400 point. Looks very strong going for the markets as of now. If I talk about levels, 24,800, which was the previous peak, may act as an immediate hurdle. 800, 850 may act as an immediate hurdle next week. But I think the way the markets are going up today, it can take that out next week. Bank Nifty is something which needs to be watched out for, because clearly that has been a marked underperformer. And with the kind of move that we're seeing in the bank Nifty today, if it manages to sustain above 51,500 next week, I think a bank Nifty is something which can again look at new highs closer to about 53,000, because clearly there has been a massive underperformance in the bank Nifty. Now, talking about the couple of stocks that you spoke of, first let's talk about Shriram Finance. It's a very strong going for the stock, and I don't see any reason to exit from the stock. If you had bought the stock at lower levels, I would strongly recommend continue to hold on to it. Very strong looking charts set up, matter of time before it breaks out of that previous high of 3060 and goes into a territory of 3400. If I take a look at the longer term time horizon charts and the kind of volume that I'm seeing in trade today, no doubt that the stock will break out above that and can head to levels of 3400 in the near term. As far as Amar Raja battery is concerned, I'm not too gung-ho at these levels in the stock because stock has already been outperforming big time. I see slight divergences there. Immediate resistance on the upside is at 1740 odd levels. So if you already have it, maybe continue to hold on to it for a target of 1740. Fresh investment at current levels, I would try to avoid in Amara battery. If it corrects back to 1500 odd levels, then yes, I could look at fresh entry in Amara battery as well.
Okay, that's the take on some of the buzzing stocks. We're going to take a very quick break on that note, but come right back. It's an extremely buoyant and exciting market. We'll discuss all the other movers on the other side. Back to closing trades right here in ET now, and holding up very smartly. A good 400-point move on the index alone. Good market breadth. A lot of lively spots such as Paytm, Shriram Finance, Divi's Labs, Apollo Hospitals, even Wipro, which cracks so hard after its numbers. That's also jumping up by about 4%. Metals as a pack as well is looking quite smart. Tata Steel, Hindalco, JSW, all holding out very, very smartly. The only odd losers are in ONGC, DRL, HDFC Bank is absolutely flat, and Axis, ICICI Bank in at least today's market look like relative underperformers. That said, from within the broader end of the market as well, a Bharat Forge, which has seen a dash of about almost 6%, Piramal Enterprises holding up 5.25% right now, Ashok Leyland, Emphasis are some of the other names which are looking extremely buoyant. Kunal, what banks could not, you think IT can do? A more convincing, long, sustainable, durable uptick, you think, on the index alone?
Yeah, I think there's a strong possibility. And I think now with the move, which is maturing for Infosys, TCS, and then trickling on to the other mid-cap IT names, I think I would probably expect that this could now be a multi-quarter, even a potential multi-year up move for many of these IT stocks, because we've not seen these IT stocks moving up in a hurry by margin of 20-25%. I think the index has already rallied some 25 or 26% broadly from the June lows. So I think in that context, it's been an exceptional performance for the IT stocks, and the best part is that the large cap IT stocks are the only ones which are performing. And even at a point where the likes of, I think, Wipro, which has underperformed in the last few days on the back of results, mid cap IT stocks which are making a comeback for themselves above their respective 200-day moving averages, still many of the mid cap stocks are almost 15 to 20% off from their previous major swing highs and lifetime highs. So I think in that context, I would still believe that the uptrend would continue for these IT names. What could probably happen is that the horses could change for these IT stocks. So now what we've seen is large cap IT stocks doing well. There could be now a phase that the mid cap IT stocks could start to outperform. L&T Infotech Mindtree is another name which is heading towards a breakout. Coforge has done exceptionally well above the 6,000 levels. That also looks very attractive. India Mart is something which is also looking quite strong on the short to medium term charts. There are many names from the IT, ITS, which are looking very attractive on the mid-cap IT front. I think that's where the next trend could probably seep in.
Okay, so mid-cap IT perhaps could be the next trend to watch out for, but what's trending today is insurance as well as metals. So insurance names like NIA, which is New India Assurance, GIC as well as LIC are quite excited in the trading session. Also the metals pack is doing quite well, a 3% gain coming in on the metal index. Mr. Advani, between the insurance pack as well as metal names, any top recommendations?
I think they're both fine because looks like the government is still continuing to spend on infrastructure, which is good for metals, good for cement, so that and also good for logistics. You mentioned about insurance. Insurance is becoming the new jewel in the pack, and it's actually going to be pulling the whole banking sector because all the banks own a big part of insurance companies. India's getting richer, and people are starting to buy insurance, and I think that's good. And the best part is you listen to LIC trying to get agents. They're advertising to get more agents. If they're in the game, obviously they're seeing that there's a lot of business out there, and we're seeing this in the movements of the stocks, which have all moved up 5 to 10% over the last few days.
Right, okay, that's that on some of the life insurance plays. Aditya, any of the charts that's standing out? Because since budget day, we've seen quite the sustainable move, especially on the life insurance plays.
Absolutely, Aisha, no doubt about that. And there are a couple of names which still stand out, I believe. Let's start with LIC first. I think after a big lull phase, stock has finally managed to cross its previous peak, and now I think stock is getting up for a move towards 1300. So even at current levels, it's a very strong buy. Looks like it will test levels of 1300 on the upside. On the downside, 1150, 1100 is a very strong support for the stock. So I would suggest LIC is still a buy at current levels. One can go ahead. ICICI Prudential is something which has outperformed big time the most of the life insurance companies. And this is one thing I think one can still look at on the charts. It looks very attractive. I think 10 test levels of 810 on the upside with the support on the downside at 700. So ICICI Prudential is also something looking very strong. And New India Insurance, the one that Anisha spoke of some time back. So looking at the setup today, 16% up move on very strong volumes. If we get a follow through move on Monday above 300 odd levels, I think this also takes all the check marks, and then one can go ahead and buy New India Insurance as well for a target of 350 on the upside.
So that's the view on some of the insurance companies. In fact, my colleague Gaurav has done a deep dive as to what these stocks have been doing over the past few days and what are the key triggers for them. Gaurav, talk to us about what's exactly is happening in the insurance space and what's keeping all of these stocks abuzz.
Well, yes, life insurance sector is definitely in focus because post results and post elections we have already seen a rally in the life insurance segment. Specifically when we talk about ICICI Pru, that is up almost by 12%, HDFC Life is almost up 10%, and if we talk about SBI Life also, that is also up more than 5% since in the last 5 days. And the reason being that the near term overhang is over is what experts believe. Now when during the budget we have seen there are 3 areas which remained actually untouched. The first one is the composite license. Now what experts believe is that this would open the health insurance for life insurers, and this would be positive for the segment. Second is that the corporate tax rate. Now what experts believe is that because the corporate tax rates were not changed majorly, that has been kept lower, and that will actually help the policyholders and that will compensate the policyholders. Lastly, when we talk about surrender value, now there also we did not see any kind of major change coming up from the budget or any kind of regulatory move coming up, which actually gives them confidence for the stable and improving profitability for the company from here on. Apart from that, finance minister also highlighted that 2/3 of the taxpayers actually chose for the new regime of taxes, and that is why they believe that the correlation between taxpayers and the insurance sales is also low, and that is why it gives another measure of growth for the insurance companies. When we talk about valuations also, now CLSA believes that these companies also trade at a healthy valuations, and when we talk about the growth prospect, that is also healthy at 13 to 14%, and VNB margins are actually a little expected to go down almost to 8 to 14%, but overall in terms of valuations and in terms of growth, it gives them very much confidence, and that is why we are seeing a run up in the insurance segment, specifically in these 3 companies that we discussed.
Okay, we leave it at that, Gaurav. In the meantime, Pashupati, thanks as always for taking the time out and joining in today. I'm going to quickly take it across to both Aditya as well as Kunal, get in some closing ideas too. Aditya, what's on your list?
So I've got a couple of buy recommendations, Aisha. First is Maruti Suzuki. Looking at the way the entire auto space is buzzing around, I think Maruti is an excellent buy at current levels. Next in line for an outperformance after Tata Motors. So at current levels, it's a buy for a target of 13,800 on the upside. With a stop loss at 12,200. It's more of a positional buy because I have a higher target here. The second stock is Ramco Cements. Again, the entire cement space has been doing well for itself, and Ramco is something which has outperformed the entire pack, and now it's broken out from that downward sloping trend line on good volume. So I think there is higher levels here which is coming through. 900 is the target, 790 is the stop loss. So buy on Ramco Cements as well.
Right. And Kunal, what about your closing strategies?
Well, I would believe Bajaj Finance stock, which has been beaten down significantly, I think that stock would have bottomed out. There are clear evidences that the stock has formed an RSI divergence, reversal nature in terms of indicators. So a major bounce back is what I would expect on the stock in the near to medium term. Bajaj Finance is something which I would look to suggest on a closing trade.
Okay, that's that on closing ideas. We're going to take a very quick break. Interim dividend announcement from Vedanta. Discuss all those stocks after this very short break.
Welcome back. Good recovery in the market right now, but numbers coming in thick and fast. We have the numbers coming in from Cipla, and the first look suggests that it's a beat versus the expectation. The actual profitability has managed to come at 1,180 crores, and that compares with the expectation of 1,071 crore that we had earlier, and that's the reason that stock is higher by almost 3.5% right now. So those are the first details that we are getting as far as the numbers are concerned. Not too many other details, and I'm actually not sure whether the numbers are out on BSE or not. I'm trying to just open the NSE details and see what the first look of the numbers is as far as the top line is concerned. So overall, I'm looking at the standalone statement at the moment, and the revenue from operations have come in at 4,501 crore. That compares with 3,921 crore that the company had reported last year. So it's a good jump coming in as far as the top line is concerned, and the profitability is a beat as well. Of course, we'll wait by to get more details, because on the margin performance as well, 25.6% is what the company has delivered in terms of EBITDA margin, and that compares with 23.6% that we had seen earlier. So these are the consolidated numbers that I'm now talking about. 6,694 on the top line. That compares with 6,329 last year. Margin coming in at 25.6% versus 23.6%, and the profitability has also seen a healthy jump, 1,178 crores versus 996 crores, and that's the reason the stock is up almost 3.5%. Kunal, any quick word as far as the stock price is concerned? Would you buy this afresh if the stock does continue to gain on momentum?
Yeah, I think it's come back to a key support level around the 1,500 mark. So what was happening over the last 3-4 weeks was that the stock was going through a drag. It was a mean reversion point for Cipla, where from 1570 odd levels, the stock had come back towards 1500. But this was more of a gradual correction for the stock price. And just closer to the 50-day moving average is where we've seen the stock or the correction getting arrested, the stock completing that mean reversion and now bouncing back again. So which means that now we are looking at a fresh floor or a support for Cipla, which is closer to that 1500 mark. Keeping that as a stop loss or a support point, I think traders could look at a buy even at current levels.
Okay, that's the take on Cipla, wherein we are continuing to see the price action or reaction rather to its numbers, which seems like a beat right now. We will, of course, get in more details. Even the margins have come in better than what the street was penciling in. Even the ET Now poll was working with a figure of about 24.1, and 25.6 is what they've actually delivered. But that's about Cipla. Just looking at some of the other buzzers, Emphasis, Ashok Leyland, Piramal Enterprises, Bharat Forge, they're all spaces which continue to hold out. Adani Enterprises, Adani Ports as well are seeing a fair amount of buoyancy. In fact, Ansh also is here. He's been spotting some volume action. Ansh, what are the buzzers looking like?
Right, so Bharat Forge will be the first stock in focus as the stock has given a good breakout from its downward sloping resistance trend line, surpassing above its 20 and 50 DMA, along with good volume of around 2 times its average trading volume of last 20 sessions. Also, if you see the same stock on a weekly chart frame, then the stock has formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. Apart from this, Ashok Leyland will also be in focus as the stock has given a breakout from its 15th session of consolidation pattern and has also registered its biggest single weekly gain in 12 weeks. Also, the breakout is backed by good volume of over 4 times its average trading volume of last 10 sessions, indicating good participation in today's breakout. Davis Lab will also be in focus as the stock was actually stuck within a sideways range for around 35 sessions, and today it has given a good breakout from that sideways trend. And in addition to this, the stock has also touched its 2-year high level with good volume. Lastly, Vedanta will be in focus as the stock has been in a downward trend, and today it has given a breakout from its downward sloping channel, indicating a potential reversal in trend on upside. So these are the breakout stocks based on price volume action.
These are a bunch of volume buzzers. Cipla continues to see price action. In fact, the stock is now holding up almost 4.5%. So it's a 1% jump that it's seen just reacting to its earnings. Pharma in any case seems to be the flavor of late. Vivek Iyer too joins in to talk about his thoughts on the markets. Vivek, hi, afternoon. Let's begin firstly by your thoughts on pharmaceuticals because, as standalone and individual the cases may be and niche a pocket, but you are pretty much seeing a sector turnaround.
Yeah, it's been one of the easier sectors to pick in. I think it's been pretty hard to go wrong in the last 6 months. We have positions in various companies, and yeah, it's. I think there's still some way to go in this cycle. So I think been easy to pick, and we continue to hold.
You coming in as far as pharma sector is concerned, hold that thought. We would want to pick your brain regarding Paytm as well. But before that, let me take it across to Ankur as well. Ankur, we saw that positive statements coming in from the secretary. But what more are you picking up with respect to their license in the way forward?
So all in all, it is a news for Paytm, that is 197 Communications, its arm will move Reserve Bank of India for getting payment aggregator license. Now remember, this license was sought by the company for long so that this kind of business can be started by Paytm itself, and now Reserve Bank of India will reconsider this proposal which has been sent by the company. Now what has been the history? So far the company had earlier moved Reserve Bank of India, but Reserve Bank of India had directed that you should take approval from government on FDI investments which will be there, and now we understand that as per the statements which has been given by DFS secretary, government has approved the FDI investment proposal. So now company can once again go to Reserve Bank of India and seek approval on this license, and once this license is received, the company can start business for onboarding more merchants and get more business for the company.
Right, okay, that's that on Paytm. Kunal, I don't know if you're tracking the charts of Paytm, are you?
Not really, but yeah, I think the move today which you've seen today for Paytm above the 500 mark seems to be a breakout move for the stock, even though it's struggling or trading below the long-term moving average. But I think, yes, the recent move for the stock has been quite strong. Still a lot of confirmation required in terms of a breakout or a start of a trend on the longer-term time scale. So we'll wait out for that.
Okay, just some more details coming in for Cipla because the press release is out. The North American business has reported an all-time high revenue of $250 million, which is up 13% on a year-on-year basis. We also have details coming in on One India. The India branded prescription business grew at a healthy rate of 10% on a year-on-year basis. The R&D investment stood at around 353 crores or 5.3% of sales. The net cash position is also quite strong, and of course the update as far as compliance is concerned is that Patal Ganga and Kurkum facilities are classified as voluntary action indicated. This commentary coming in from Mr. Umang Vora, the MD and Global CEO at Cipla as well. He says that he's pleased with the Q1 progress and the revenue growth of 7% with EBITDA margin of 25.6% led by operational efficiencies is something that he's excited about. They're also positive about the branded prescription in India, which grew at 10%, and the concentrated focus on execution and differentiated portfolio have further even strengthen the US business, and that's the reason that $250 million kind of number coming in. In South Africa, they've recorded a solid growth of 19%, and going forward, they believe that the focus will be on key markets, further building their flagship brands, investing in future pipeline, as well as focusing on resolutions on the regulatory front. So overall, a positive commentary coming in from the management of Cipla. Good show coming in from North America with that 15% growth. India business growing by around 10%, and that's the reason that stock is fairly excited right now. What a 7% move coming in on Cipla. So good going as far as the result reactions are concerned today, whether it's Shriram Finance, whether it is Cipla now, and of course Paytm, the number that we were just discussing earlier as well. Shifting focus to some of the other big buzzers right now, and of course it is similar names, to be honest. Yes, Amara Raja, Emphasis, these are some of the names which are also doing quite well. But coming back to the discussion on Paytm, Vivek, do you track this one closely, and do you think this is one of those binary and turnaround candidates?
Yeah, I think this is one of those harder opportunities to capitalize on. Certainly not up my street. I think very nuanced and differentiated view to take a buy call on this. I think avoid is very, very easy, and the case there is very simple to be made. But to buy here, I think would require greater depth of study.
Yeah, absolutely. Aditya, have you been tracking Paytm though on the charts?
Is it for me, Aisha?
Yes.
Yes, I have been tracking the stock on the charts for some time now. The interesting thing is it's not for faint-hearted. We know that because stock tends to make upper circuit, lower circuit. But looks like now it's formed a base for itself, at least in the near term. 450 is a very good support area for the stock. I think stock on the upside can easily test levels of 570 to about 600. So if somebody has the risk appetite and can put some money at risk, Paytm can be your pick, definitely, because the risk to reward is in favor of going long in Paytm at current levels. Could be one of those like the Zomato kind of a move. Too early to say, but yes, at least we can see a bigger up move in Paytm coming through. This sustains.
Okay, high risk reward play, but the risk reward is at least balanced towards the gainers versus towards the gaining side versus the losing side. In terms of the other internals right now, it's the auto index which has managed to hit the mark of 26,000 for the first time ever. Of course, the record high level at that. What do you make of the construct in pharma, in autos, Vivek? CVs versus two-wheelers versus the SUVs, and of course new players which is going to hit the street in terms of Ola Electric, which is expected to happen over the course of next couple of weeks itself, and Hyundai later in the year.
Yeah, I think autos might be one of those cases where the best is might be behind us. At least the industry level data is not as encouraging as it was 2 years ago, and it's we're starting to see a slowdown. And valuations now are, of course, much higher and priced to perfection, and that's been because of the stellar performance over the last 2 years. But I feel like there are much easier places to hunt in terms of the risk reward.
Okay, and what might those pockets be, Aditya?
As far as autos are concerned, Aisha?
Yes, that's right.
So one, I guess, Maruti, we just spoke of. I think Maruti, after a good consolidation phase, is getting up for a big up move on the upside. So Maruti should definitely be on your radar if you're looking to pick the auto names. 13,800, but 14,000 is what I'm eyeing on Maruti Suzuki. The second stock, definitely Tata Motors, is something which has seen a big breakout in trade yesterday and a follow-through move they're seeing in trade today as well. So if somebody is looking at maybe a slightly longer term time horizon, can look at Tata Motors as well, maybe on dips, not at current levels, close to 1,050 is a good buying idea. The third stock is something, Atul Auto, not usually spoken about, Aisha, but last couple of weeks back, we'd seen a good volume backed up move in the stock. And in the last couple of trading sessions, it's seen a kind of a consolidation move, Atul Auto. From current levels, I think so it offers, again, an excellent risk to reward. So I would be a buyer in the stock, rather stick my neck out and allocate a good portion of my money to Atul Auto with a stop loss at 670 on the downside and look for a target of at least 900 on the upside. So Atul Auto is something which is looking very interesting to me on the chart setup.
Right. Okay, we've been talking about earnings and the kind of reactions that we've been seeing post that, and both Emphasis as well as Ashok Leyland did react quite positively to their numbers. In fact, let's hear out what the management's had to say about the future visibility.
Our pipeline is actually up 17% QOQ, which is, I would say, the biggest jump we've seen in pipeline in the recent past. So pipeline is also very broad-based. BFS is up, non-BFS is up even more. If you look at the non-BFS pipeline is up 25%. Banking, we've seen some good conversion. Top 10 account pipeline is up 30+% sequentially. So I think it's a pretty broad-based recovery in pipeline. That, as you always know, is conversations lead to pipeline, pipeline leads to TCV, TCV leads to revenue. So I think we are cautiously optimistic that we've now put a second dot. Could the growth be stronger? Absolutely, it always can be.
With respect to last year Q1, you will find that our margins have expanded quite a bit. So I think that trend will continue. Quarter on quarter, we will do better with respect to the quarters of the previous year. In this year also, our non-vehicle business will continue to do very, very well. Actually, it will outpace our vehicle business in terms of growth.
Okay, so that's the commentary coming in from some of these managements, and the stocks of those companies are buzzing. Amara Raja is up 7%. Bharat Forge too is actually doing quite well with that 6% gain coming in. Just taking stock of some of the other buzzers. And on the losing side, Mankind Pharma is coming under pressure. Remember that acquisition that they've done of Bharat Serums is something which the street is calling expensive, and they are fearful that it's going to be EPS accretive only in FY28. So it's a large acquisition that the company has done, but it's the market which warrants our attention, because we're less than 20 points away from the all-time high level. We're at 24,854 thereabouts. That's the actually life high level. We're right now around the levels of around 30, so just 20 points shy from that mark. But Kunal, are you worried about the ferocity? As in, today we didn't have any news. Yes, the good news is that the global markets is looking up, because after a couple of days of weakness, the US futures for now is comfortably in the green. Europe is in the green, but no particular reason why these, why the market should be moving today. And earnings also, which have been in line, are just getting rewarded right and left.
Well, yeah, I think so. I think it's more of the flows which is coming directly into the individual stocks, and I think there are two ways to look at it. So on the global market front, absolutely yes, that there is no major cues from across the globe that our market should have been up 1.5–2% broadly. But then when you look at the internals of the market, I think the ferocity of the move for many of the sectors. So we ideally look out for sectors which were weaker, and those are the ones which typically tend to get into a reversal or some kind of an up move. And then on days we see the stronger stocks, stronger sectors outperforming. But today is an all-round move, because even from the stronger sectors, the likes of IT, we've seen a very strong comeback from these large cap IT names, or rather a follow through up move. Then we saw very good comeback from many of these auto names. So I think except for Tata Motors, most of the other stocks were struggling. They've made a comeback. The private sector banks, and even the likes of Kotak Bank, HDFC Bank, these stocks are making a very strong comeback for themselves, following up with the PSU banking names and many of the PSU stocks overall. So this is an all-round kind of a move, and that generally happens when the market sentiment starts to become positive yet again. So this generally is an indication that we should see a follow-through up move, and I think we could probably be hitting that new high as well next week. And my expectation is that after today's up move, we could be now challenging the 25,000 mark as well.
25,000, so that's not far away. Perhaps in August series itself you might see that mark, but the next week is going to be fairly important as well. I'm not sure whether we'll hit that life high level today itself, or it's going to come with Monday morning. But important cues which are lined up for the coming week. Yes, earnings of course forms a large part of it, and I'll quickly run you through the earnings calendar which is stacked up over the weekend. Of course, we'll get numbers from ICICI Bank. Dr. Reddy's will come out with its earnings come tomorrow. NTPC too is one of those candidates. Next week it's going to be heavyweight from the auto sector, so Maruti Suzuki, Mahindra, Tata Motors, these will come out with earnings. Tata Steel, Sun Pharma, ITC, Adani Ports, Titan, these are some of the other names which will come out with earnings as well. And in terms of other internals as well, it's as it is going to be a heavy news flow week, because Fed interest rate decision will come on July 31st, and that's the next thing to watch out for, because now the expectations have been factored that perhaps there could be a rate action in July itself, and with the kind of political uncertainty which has suddenly emerged, or all the headlines coming in from there, this would be an important event to track. Fiscal deficit data is something we'll get for India. You will also have a stock split, perhaps a decision coming in from Dr. Reddy's, US jobless claims as well as manufacturing PMI. These are some of the details to watch out for. And August 1st, as is the case with every first of the month, we'll get the auto sales data. So that's also something that we'll watch out for. There was a bit of a tempering or moderation as far as auto sales is concerned over the last couple of months. Maybe we'll see a bit of a turnaround. So important cues which are lined up in the coming week as well. But talking about earnings, I think ICICI Bank is expected to come out with numbers tomorrow. Maybe we can take it across to Gaurav to get a sense as to what the earnings are, because overall, if you look at the asset quality of the other banks as well, there was a bit of a chink in the armor, though there were some internals which were positive. In fact, let me take it across to Vivek and ask that question on financials, because this time around earnings have been a bit mixed, right? NIMs for a lot of companies were coming under pressure. There was those asset quality issues as well. Today, of course, we have the reactions coming in for the RBI LCR draft regulation as well. What do you make of financials? Should one take fresh bet in the sector, looking at the fact that they've underperformed, or do you believe that they will be sideways for a long time now?
I think it's quite likely, at least we have a short-term bottom in place. The fall has been pretty severe over the last few days, but it's exactly the opposite of pharma, right? It's when the sector is facing headwinds as a whole, it's very, very hard to pick. And I feel you're just better off as a trader looking for risk rewards in sectors where it's much easier, where your base rates of success are much higher. So you pick 2 or 3, and even if you don't pick the best of them, you're still likely to do well. So for me, it's an avoid to trade.
Okay, an avoid and some stock selections coming in there. We're closing in absolutely fabulously. Like Kunal said, now you can anticipate the 25,000 mark on the index alone. But Kunal, where is the leadership going to come in from sectorally, according to you?
So it was till yesterday or day before, it was more towards the IT stocks which were doing exceptionally well. I think after yesterday's move for Tata Motors and today's move for many of the other auto names, Bajaj Auto, Hero MotoCorp, Eicher Motors coming back to a breakout over the 5,000 levels. So I think many of these other auto stocks could start to participate, which means that we could now be looking at a higher level of participation coming back into the auto stocks. And I think, whenever that happens, so when, one sector leads for a decent period of time and then moves up by a margin of 20-25%, like what happened to the IT names, you might probably expect that the large cap IT stocks may just about get into a phase of consolidation. The mid cap would start to pick up. So I think in that anticipation, the sector may just balance out. But when you have other sectors like auto stocks, which I would believe could make a strong comeback, that's another pocket in terms of strength, which over the next few weeks, I would probably anticipate many of the stocks to give a further up move of 8 to 10%, and including large cap names. So that's one pocket to look out for. Private sector banks, I think, could be a pocket where you might see short covering move, because when market gets into that confidence mode, pockets where there is a lot of short built up, they are the pockets where we typically see more of short covering. So it may not be a trending move for these private sector banking names, but I believe that potentially over the next 3 to 4 days, we might see a 500 to even a 700 point short covering move even for the bank Nifty.
Vivek, is that your preference as well? That private banks are only going to last as long, and one can see that play out in the earnings as well, right? Be it Kotak or for that matter in HDFC Bank. In fact, the underperformance kicked off once HDFC Bank came out with its Q1 update. Do you sense a rotation now playing out, and a sustained one at that?
Yeah, at least for this quarter, it seems that we are in rotation mode. And I think when there are so many other sectors doing extremely well, I think of the companies above market capitalization of 1,000 crores, the results that have come out so far, more than 50% of them have reported earnings growth more than 10%. So it's been a great earnings season so far, hopefully going forward as well. So why not focus where the earnings are rolling in?
Okay, point taken. Thanks, Vivek, for making time and speaking with us today. Appreciate your time. In the meantime, Kunal wanted, or Aditya, let me actually bring you into the conversation. Want your view regarding IndusInd, which will come out with earnings later today, and Indigo as well. Would you want to take a bet ahead of earnings?
Looks like Anisha Anderson, if we talk about first, is posting a good set of up move in trade today, forming a bullish engulfing pattern and taking support at the lower end of the pattern. So I think this is something which will head higher. I think I don't see any negative surprises. We might not see any negative surprises from the results. So one can actually take a punt in IndusInd Bank at current levels and look for a target of 1450 to about 1500 on the upside. And given the fact that the way banking are moving, I think IndusInd can be one of the ones which can lead the banking charge. Talking of Indigo, that is something which has seen a big up move and then a consolidation. I think follow through up move can be seen there. A bit of a risk trade here because on the downside supports are at 4100, on the upside stock can test levels of 4700. So maybe evenly poised as far as risk to reward is concerned for Indigo. But yes, the chart setup is very strong, and if there are no negative surprises from the results, I think Indigo is going to test levels of 4600 very soon.
Right. Okay, that's the take coming in now on some of these names. But great to have you guys, Vivek, Aditya and Kunal, all on the show.
Pleasure.
And we're closing in at the highest point in the day. So let me hand it over.
If you like this video, then like, share and subscribe to ET Now.